What's up? It's me, Don Tolliver. If I could describe the Bose Ultra Open earbuds, I think I would describe it as very seamless. It can definitely be something that you can style. It's like earring candy. Check out Bose.com for more.
We're going to talk stocks and the economy. Nancy Tengler, CEO and Chief Investment Officer of Laffer Tengler Investments, author of The Women's Guide to Successful Investing, and Pete Najarian, co-founder of Market Rebellion and Option Monster. And the New York Giants won a football game last Sunday. How about that?
It was about time.
I mean, you got to take it when you can. Who the heck knows what they're going to do? And
Absolutely.
Nancy Tengler, are you watching the baseball playoffs?
I am.
I know. That's
fun.
It's fun.
Big baseball fan.
Yankees won. That was good. Meanwhile, stocks keep winning. How about that? 511 points on the Dow, 205 on the Nas, 64 on the S&P. The S&P, are they both record highs, the Dow and the S&P?
I believe so, yeah. I mean, it's been an absolutely incredible run, and they just continue to mystify a lot of folks out there that are looking for that pullback, Larry. And even though we get a pullback here and there, the absolute direction has been to the upside and just continues to go on. And we hit record levels, as you just mentioned, on the S&P 500 above 5,800. That's a monstrous number and a huge move year to date.
These are numbers that I never thought I'd see. In all honesty, I first came to Wall Street from the New York Fed 1975. I joined something called Payne, Weber, Jackson, and Curtis. I was their Fed watcher. And then I went to Bear Stearns and was their economist. And Nancy Tengler, I don't think this is unimaginable, these numbers. Unimaginable.
Well, for those of us who started in the dark ages, I would have to agree. But to your point, what drives stock prices? It's earnings.
Yep.
It's the mother's milk, as you say. And I think one of the interesting things that I noted this last couple of weeks was that corporate tax receipts for the third quarter came in much higher than last year, and
booming
at equal levels to the previous year. But even more importantly, I went back and looked since the Tax Cut Jobs Act. Corporate tax receipts have doubled from $200 billion to $400 billion. So this notion that cutting tax rates is going to somehow benefit corporations is nonsense, in the sense that they will make profits and they will pay for them. But to my original point, corporate tax receipts are up. I think earnings season, analysts have brought the earnings numbers way down for third quarter. I think, we saw the banks on Friday. Those numbers were excellent. Now you've got Jamie Dimon saying, maybe, or his CFO, soft landing. And I think we're going to be pleasantly surprised, and I think the market's been sniffing that out.
You guys read, Pete, do you read Ed Yardeni?
A little bit. I listen to Ed when he comes on, but, very much like Nancy, when I look at what's going on in the market, and we've got all these huge, data points that we are focused on, right? At first it was CPI, then it became PPI, and they basically move pretty close to in tandem, both of them showing a little bit hotter than expected type of numbers. But what trumped both of those? Well, it turned out to be earnings, to the point that Nancy just brought up. I mean, I look at those numbers, and I look at J.P. Morgan. They absolutely crushed it. They couldn't have given much better of a delivery there. Wells Fargo, pretty much the same thing. The investment banking has been a huge asset, I think, for any of those folks in the financial world that are involved, and we'll get Goldman Sachs and Morgan Stanley this coming week. So there's a lot in front of us right now that I think makes it pretty interesting. And the financials, when you really look at it, we started the day in somewhat positive territory to actually finish the day with the financials leading all the different other sectors up by almost 2%. Or it was 2%. So it shows you a lot that folks, they look at the numbers, they react very quickly, but then it's the next numbers. And we got the PPI an hour later. We get things going for the day, and these financials really did carry the day.
Let's see. The KBW Bank Index for the big banks, year to date, up 24.2%. That's a big number. And the reason I got a couple of things for you. You guys are doing great. I'll just give the show over to you. But let me just put in the reason I mentioned Ed Yardeni is that he has some of the best laser-focused analyses of profits, earnings. And he is focused on that regardless of what the data come in, the CPI, the PPI, various economic numbers. And it's really fascinating how important important a role he plays for profits. I mean, he just talks about it endlessly, and it still looks strong. S&P 500 profits still look strong. And so I agree. I mean, that was always my mantra, and I love reading Yardeni because he covers that as much as anybody I know. To Nancy Tengler's point, Laffer was right. All right? Laffer was right. Right? You cut corporate profits, you cut corporate tax rates, guess what? Corporate profits soar, revenues soar. And it would happen again. If Trump wins and he has a chance to renew the tax cuts, and he's got even more tax cuts now, everybody's going to say he's loading up the deficit. No, it's rates will come down and profits will go up. I mean, this stuff actually pays for itself inside the 10-year windows. Even though the officials in Washington, the CBO, and the Joint Tax Committee will never admit it, they're always wrong. Laffer is always right. So, I mean, I was
just going to say that the CBO is always wrong.
Yes, they're always wrong.
By a wide margin.
And it's stupid. Yeah. We live and breathe these projections of the CBO. I mean, corporate revenues have exploded since the tax rate was cut. I mean, exploded. That's how bad it is. I mean, it'll happen again if they give them a chance. But I mean,
I couldn't agree more.
Yeah,
couldn't agree more.
I mean,
the other person that thought he should win the Nobel Prize was George Shultz. I was fortunate enough to have dinner with Arthur and George Shultz because he's on a board at Bechtel. When I managed the money for them, and he it was magical. I mean, he said, "Look, it's political. You should have won. I just want you to know that." So I thought that was funny that you brought that up today. His name may not have been submitted, I think you said. But.
Well, that's the problem. I don't structurally you have to submit his name. Did you see? I wrote a piece on this. I don't know if you saw it. I wrote it. It was posted on Fox Business Digital and the New York Sun, and Real Clear Politics picked it up too. Yeah, no, I wrote a whole thing about it. What year did you have dinner with them? When are we talking about?
So that would have been like 2002, 2001, maybe. That was when I was at Fremont Group, which was the group that managed the money for all the Bechtels and the Bechtel Corporation.
Well, go ahead, please.
No, I was just going to say George Shultz was just as you knew firsthand, was an amazing individual. And we'd sit in these meetings, these investment committee meetings, and he would speak very softly, and everyone would lean in to hear what the oracle was saying in real time. But it was just a real privilege.
I got to know him.
Sorry.
No, this is a wonderful conversation. I got to know Mr. Schultz in his Hoover institution years, okay? I didn't know him during the Nixon years, but I knew him in the later years. Kevin Warsh, I don't know if you know Kevin Warsh, a very dear friend who's at Hoover also, and he was on the Federal Reserve Board for many. Actually, Kevin Warsh may well be the next Fed chairman. But Kevin used to say that Mr. Schultz was the greatest living man in the U.S., and at that point, I think that's right. But, Nancy, I want to tell you one thing. When Mr. Schultz was Nixon's Treasury Secretary, and he was kind of the economic czar, he didn't buy, even though Laffer worked for him, actually at OMB, he didn't really buy into the Laffer curve. It came later. Yeah. But the Laffer curve was correct. Arthur was right. And I hope we can do the whole bloody thing again. I mean, just because Trump wants 15%. If you make it in America, he wants 15%. That's so bullish for stocks. It's unbelievable. Think about that. Pete Najarian, think about how good this is going to be.
Yeah, absolutely. And I'm just listening because I'm very well aware of some of these folks that you're talking about and just as impressed. The one thing that I just wanted to go back into the market just for a moment is I'm impressed with the resiliency of this market.
Yes.
There is a lot of different reasons that we come in each and every day and we see the different data that's been produced, and then we look at earnings and everything else. But to see how resilient this market is and that folks are still willing to go and buy at different levels has been absolutely an incredible thing. And especially as we're watching also, this 10-year, which has been kind of mind-boggling to watch where that's gone in the last couple of, let's call it the last month or so, going up from 3.6 all the way up over 4 at hit 4.10 the other day. That's been something that I think is probably not talked about enough, but it's an interesting thing that I think we all should keep our eye on. But I think the reality is that this market digests information faster than any market that I've been a part of, and I've been here since 1992. So I've been here a little while, and I've watched the markets move the way they have, but this has been absolutely incredible. The digestion has just been incredibly fast, and then moving on to the very next thing and the next thing. And that's one of the things that I'm probably the reason it's so resilient is always looking ahead, just like we always talk about. You always need to look ahead. You want to know the numbers, but like when I look at earnings, I always say, but what does the guidance look like? Because I really don't care once they get delivered. It's great, but I always want to know what the guidance looks like.
Let's take a break. I think the whole thing is very interesting. Let's talk some more about the resilience of the market and whether there's too much speculation in the market and what we might expect. Anyway, Nancy Tengler, CEO and Chief Investment Officer of Laffer Tengler Investments. Her book is The Women's Guide to Successful Investing. Pete Najarian, co-founder of Market Rebellion and Option Monster. I'm Kudlow. We'll be right back.
This is the Larry Kudlow Show. Now, back to the Larry Kudlow Show.
All right, we're talking stocks with Nancy Tengler and Pete Najarian. Pete was talking about bonds at the break. You're right, 409, actually up another 12 basis points this week. I guess the low when the Fed made its super rate cut was, about 360, 365, something like that. Now, let me ask you, Pete. I mean, theoretically, you watch the 10-year being the discount rate. So when the discount rate goes up, the future value of earnings is supposed to go down. Doesn't seem to be happening. When the discount, when the rate goes down, the present value of future earnings is supposed to go up. It's just not working because earnings are just so strong no matter what happens.
Well, and that's what we were talking about too, Larry, is just the fact that we were talking about resiliency, and I think part of that is the fact that, we have shifted just a little bit. And obviously every week we're going to get more and more different data. It's going to be something that will move the 10-year. It will move probably volatility. But I think that the reality is, next week we have already got retail sales in front of us, housing data in front of us, Fed speakers talking, and all of that is going to be influential probably for the 10-year and the direction that it's been going, which has been almost straight up for a month. And it's been an incredible move to the upside, despite the fact, like you were just saying, we're seeing earnings that are coming out that look pretty daggone good. And that is why the Dow yesterday made the kind of move that it did, almost a full 1% move to the upside, because of the fact that J.P. Morgan did so well and BlackRock did so well and Wells Fargo did so well. And you look at the financials, they were solidly strong, but they got even stronger throughout the session. Then other parts of the market started to be an influence as well. And it's almost as if the blinders are on and folks are just continuing on this move to the upside. And it's been incredible. But I would warn people a little bit, this volatility is something. And it's not just the VIX itself. But I even would say, how about the crude volatility? And not a lot of people talk about that, but crude oil was down at 65 and then jumped all the way up to 77, and here we are closer to 75, 76. But it shows you how volatile that market is as well, and the volatility there has moved up substantially as well. It was a 32, and now it's a 54. Gives you a little bit of an idea of just how volatile pieces of the market can be.
Nancy, we've seen down through the years big bull markets, certainly the 1980s, the second half of the 90s, I guess you would say. And then, of course, going into the crash, the financial meltdown, but we had a big bull market after the terrorist attack, 9/11. It was quite a long bull. But that one crashed because of speculation, mortgages, excess liquidity. The Fed was saying, people said the Fed was too low for too long in their target rate. The tech bull market in the late 90s crashed. A lot of those stocks didn't have value. But what I'm getting at is this market, which has gone on for a while, in your judgment, looking at the past and so forth, it's really a matter of your experience. It doesn't look frothy to me, even at these levels, which are astronomical. Now, what's your take on that? I mean, what does it feel? I mean, I'm reading Yardeni, and he's going through the profits, and he looks at forward profits, and he looks at estimates and so forth. It just doesn't look. It doesn't look like it's froth. But what do you think?
I couldn't agree more, Larry. I've been talking about this for a couple of years, that this market and economy is analogous to the 1990s when we had productivity growth. The only difference was Greenspan understood it, and he only cut rates twice in 96, 25 bips each. And now we've got a Fed that's just too eager. I think that was the 50 basis points was a mistake, but we'll see. Anyway, you've got productivity that's at 2.9%. I can't remember. Unit labor costs down to 0.3% last quarter. And you have companies that are not trading at ridiculous multiples. The poster child was Cisco, going out of the 1990s at 100 times peak earnings. Well, we're not at peak earnings, and nobody is trading at 100 times in the, of the sort of the Magnificent Seven. And more importantly, John Chambers, who ran Cisco, has said that generative AI is more important than the internet and cloud computing combined.
Wow.
So I think you listen to the smart folks. I was managing money back then. There's plenty of room for more.
Interesting.
Okay, thank you.
Nancy Tengler, thank you. Pete Najarian, thank you. Terrific stuff. Good overview stuff. Good history is good history.